Hey everyone, welcome back to Corporate Decoder, the place where we make sense of those giant corporate filings. Today we're diving into the Covered Bridge Fund's semi-annual report. Don't worry, it won't be as boring as watching paint dry. I promise we will get into the numbers. This report covers their performance for about half a year and we'll see how well they're really doing. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can chat about it with other investors. This report is like a checkup for the fund, showing how it's been doing from October of one year to March of the next. It gives investors a look at the fund's costs, performance, and what it's been investing in. You can think of this as a progress report card on their homework assignments. Let's talk about costs, because everyone wants to know how much they're paying. For Class A shares, the costs are about $89 for every $10,000 invested. That works out to about 1.79% of your investment. Now for Class I shares, it's a bit cheaper, costing around 77 a dealer costs. Let's dive into how the fund actually performed. The report mentions that the 6-month period was a bit of a roller coaster. There was a market dip after reaching a peak in February due to international trade war concerns. During this time, the S&P 500 declined by nearly 2% and Nasdaq even more, 4.55%. The Covered Bridge Fund declined by just about 0.4155%. The Covered Bridge Fund declined by just 0.61% thanks to dividend-paying stocks in their portfolio. Additionally, they generated income through covered calls and distributed about 0.21 per share. Moving on to the long-term performance, the report includes a table showing how a $10,000 investment would have grown over the past 10 years. It's worth noting that past performance doesn't guarantee future results. Still, it's good to see how the fund has handled ups and downs in the market. It is important to understand that the graph and table do not reflect the deduction of taxes that a shareholder would pay on fund distributions or redemption of fund shares. The report shows average annual total returns over different periods. For Class A shares, the average annual return with load, which is a sales charge, was 5.83% for the last 6 months. Without load, it was 0.61%. Over the past 10 years, the returns are 5.61% with the past 10 years. The returns are 5.61% with the last 10 years. It's a Warren Buffett style move to see if you can generate good returns over the past 10 years. The returns are 5.61% with load and 6.45% over the last 10 years. It's a Warren Buffett style move to see if you can generate good returns over long periods of time. The fund's net assets, which is the total value of everything it owns minus what it owes, are around $103.5 million, and it has 85 investments right now. The amount paid to advisory net of waivers is approximately $500,000. Keep in mind this is for 6 months, so you can double to get a yearly number. Portfolio turnover, which shows how often the fund is selling, is 49%. The fund has most of its money, around 91%, in common stocks. Money market funds, which are like super safe accounts, make up about 8.7%, and a small bit, 0.3%, is in purchased options. Let's look at where they are investing in terms of sectors. The biggest chunk, 19.6%, is in technology, so think software and computer companies. 15% is in consumer staples, which are things people always buy, like food and household goods. The fund has about 8.9% in energy companies and 10.9% in healthcare companies. Digging into specifics, the top holding is JP Morgan US Treasury Plus Money Market Fund Class L, which accounts for 8.5% of the fund's net assets. This is essentially cash. Then we have Microsoft at 5.1%. Other big names include Hershey, Qualcomm, and Verizon, each around 3%. The report notes that there were no big changes in how the fund is run during this period. This is generally good news, as it means the fund is sticking to its strategy. Now, let's zoom out a bit and consider the Covered Bridge Fund's situation. The fund seems to want to generate income and keep its investors safe from market volatility by focusing on dividend stocks and option strategies. One potential strength is their focus on income generation. That could be attractive to investors looking for steady returns in a shaky market. A potential weakness is that the consumer discretionary sector, things that are not essential like entertainment, are dragging down the results, so they should consider moving out. I would consider this a stable fund if you're looking for that kind of financial vehicle. Alright, that's our breakdown of the Covered Bridge Fund's latest filing. What's your take on these numbers and what they signal for the fund's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.